Blue chip stocks represent some of the largest, most mature and financially sound companies in their individual sectors. But what exactly makes a blue chip? First, reputation. A blue chip company is usually well established in its sector with a good reputation. This helps it stand out against its competitors and solidify its status as a leader in its industry. Second, stability. Blue chips are generally thought of as stable, with the ability to achieve steady returns and strong earnings. Because of this, blue chips can help to offset losses elsewhere in a portfolio when the markets are volatile. Third, size. Blue chips are generally large enough to weather economic downturns more effectively than smaller companies. They're often regarded as safer investments or trades, which helps to boost them to the top of many market participants' watch list. Finally, liquidity. The popularity of blue chip companies often means that their stock has high liquidity. This is because they are favored by short-term traders looking to capitalize on breaking news and company announcements, as well as long-term investors who believe in the longevity of the company. So how can you take a position on blue chips? You'll need to create either a trading or a share dealing account. You'll want a trading account if you're looking to speculate on the value of blue chip stocks with spread bets and CFDs. These make it possible for you to speculate on the price of blue chips rising or falling without taking ownership of the underlying assets. One benefit of this is that you can trade on leverage, which grants you full market exposure for an initial deposit, known as margin, so you won't need to commit the full value of the shares up front. If you're looking to invest directly in blue chip stocks, you'll need a share dealing account. When investing, you'll be taking ownership of the shares, making you eligible to receive dividends and voting rights. To learn more about trading and investing, subscribe to IG.